One of the contentious issues we've been discussing on this show in the past week or so has been the fact that Pāmu, the artist formerly known as Landcorp, has been making submissions to Michael Cullen's tax working group. Now, the question is whether they should be meddling at all. So I thought I'd get an expert in the field to talk about the tax working group and what it might mean for farmers. His name is Tony Marshall. He's the tax expert at Crowe Horwath, their accounting partners here on the country. And Tony, I want to start with a capital gains tax. Landcorp think there should be one. It's very rich for them to say that. But I put it to you that a capital gains tax wouldn't do farming or the rural community any favours.
Yeah, and I think I'd agree with you, Jamie. It would have very wide-reaching impact on all, particularly family farming operations around the country, because those assets are often handed down from generation to generation, and if you've got to pay a capital gains tax each time you do that, that creates a significant hole in any cash required to actually complete any sort of deal.
It reminds me of the old death duties, which made it very difficult with succession planning and succession from one generation to another. But under a capital gains tax, do you think this would encourage farmers to hold land rather than to pass it on, particularly if relief is only provided upon death? So in other words, you couldn't take over the farm from dad or mum until such time as they passed.
Yeah, I think that's exactly right. It would defer people's sales and any decisions around that, which isn't the right answer for the next generation coming through. I think the tax working group's got a very difficult situation to deal with, because they're pro a capital gains tax, but the government have said that they can't do an inheritance tax. But the main time that you're going to be paying on a capital gain is probably when someone dies. So is that an inheritance tax or not?
And I think if you're going to slap a capital gains tax on farming, you've got to be consistent right across the board. You need to slap a capital gains tax on residential housing, or am I being too tough?
No, I don't think you are, Jamie. I think the problem with carving out an area like they have, like the family home, obviously a very contentious issue, is that you skew the whole system in favour of that type of investment. And then if you want to create concessions for farming or for any other industry, then that makes your capital gains tax significantly more complicated to implement, and you end up like a position like Australia's got, where there are a significant amount of exemptions that make the regime and collecting the tax very difficult.
Yeah, it's like taking the GST off fruit and veggies. Good idea in theory, very difficult to implement fairly and correctly. What about the other one that Landcorp mentioned was environmental taxes, taxes on fertiliser, water use. Once again, these would kind of kneecap productivity for the rural community.
They would, and I don't think that the tax system is the right way to try and deal with the environmental impact of farming. We have the ETS system. Now, it's not perfect, but it is something that is going to apply to farming very shortly. And I think it's that regime which actually provides a good framework to deal with the environmental impact. And if you allow it to be measured at the farm gate, rather than at the processor level, then it gives farmers the opportunity to mitigate the consequences themselves. If it's at processor level, it's very much just the tax on everyone, which is simply going to increase your costs.
Tony Marshall, tax expert from Crowe Horwath, their accounting partners here on the country. Keep up the good work, and I hope Mother Nature turns the tap off for farmers right around the country.
So I think we've had enough rain for December, that's for sure.
Yeah, forget about the drought. See you later.